Hey, good morning, guys. Welcome to Market Mondays, and hopefully you guys had a great weekend. I had a fantastic week. I've been celebrating my 31st birthday, which was yesterday. So back hurts a little bit more, but I had a really great time hanging out with my nephew. I'm never going to Legoland again with my nephew, a 3-year-old, ever again. Uh, he was an emotional curveball the entire way through, and I think I was more excited to be there than he was. But I officially celebrated my birthday yesterday, which was real relaxing. But I was mostly on travel, so didn't really get a chance to really celebrate with people. But I got a chance to get some downtime. But today I want to really talk about what's going on with inflation today, with the new current numbers, as well as the what's going on with interest rates as of now. And then what's expected to happen in the next couple months, especially starting November. I unfortunately wasn't able to do one last week, but I went to a great mastermind event with my coaching program, and one of the more well-known mortgage coach as well as mortgage forecasters was there presenting on what he's expecting to see in the market, which he's always been on point in regards to the timeline, what happens to mortgage rates. Him and another guy that I follow named Barry Habib, David Luna and Barry Habib, they both work together and they really do a great job in forecasting what's going on with mortgage rates. And they did predict what was going to happen this beginning of the year. So before I get into that, of course, we got to do with a dad joke is scientists have discovered what is believed to be the world's largest bed sheet. More on this story as it unfolds. All right, guys. So, unfortunately, the new inflation data that came out was that inflation is now currently at 8.4%. Let me verify that. 8.5, sorry. 8.5%. What does that mean? It means inflation's gone up. Does that means things cost more than they were supposed to? It does. However, the other thing to consider is that inflation hasn't been this high since the early 80s. In the early 80s, inflation got as high as 12%, right? And that's a lot. That's mismanaging of the inflation rate. That's things costing more, things are valued more. You're spending more money per dollar. You're getting less per dollar than you used to last year. So, and just to give you guys an idea, the Fed or the U.S. government, the Fed effectively wants to keep inflation at 2%. We've overshot by 4 times that much. So what's the cause of that? Well, they kept the Fed funds rate low. And this is what the media likes to say as far as the Fed funds rate, or the media likes to say, really what they like to say is the Fed is raising rates. Again, the Fed raising rates is a good thing for mortgage rates because it'll bring it come down. The Fed funds rate is what their media is talking about. Has nothing to do with mortgage rates specifically. It impacts it indirectly. They raise those rates to bring inflation down. However, this thing takes time. Like they only changed it a small incremental portion at a time to not shock the market, but also be able to address the high inflation rates. So inflation is at 8.5. It is stupid high. Again, the last time it was this high was in the early 80s, and in the early 80s it peaked at 12%. So we don't really know how what's going to look like, but as long as the Fed has been raising these Fed funds rate, or the media likes to call it raising the rates to bring inflation down. Hopefully, we start seeing relief soon. And how has that impacted mortgage rates? Mortgage rates follow inflation, unfortunately. That's the tough thing. So as inflation goes higher, so will mortgage rates. I'm not going into a lot of detail, but essentially the power of dollar goes down. That means investors have to get more out of the interest rate to make up for the loss of power in the dollar. So I'm going to show you guys the screen real quick, and I'm going to kind of show you the best way to keep an eye on what mortgage rates are doing on a day-to-day basis. So if you Google today's current mortgage rates, don't forget about all these ad stuff. And you go scroll down, and there's a Google generated information. This is pretty accurate. I'm not gonna lie. This is really accurate as far as what lenders are doing with their mortgage rates. So if someone's marketing a low rate, keep in mind it might be a high. It most likely will be a high cost. So effectively, if you can also change like the loan types, add in loan types, and show the loan program that you're shopping under. All of my clients are under VA. So if you kind of look at this, the VA is a red line, and you can kind of see how it changes on a day-to-day basis. It changes so much, guys. And there's really no way to figure it out, like what's going to happen tomorrow. Mortgage rates are just as volatile as stocks sometimes. So right now, what we're saying is that VA rates, the standard around is like 5.6 essentially, and conventional fixture is about 6.8. So Most conventional clients probably would want to be up there. So for conventional clients, they're probably closer to 6. But this is just an example of like what has changed, how much it's changed, even since beginning of January. If you kind of see it from 4% to even now it's high as almost 5.5, 5.5 to 6. In December, it was at 3. So this is how much, as inflation has gone up, a lot of people think, oh, they hiked up rates. The Fed has hiked up rates, therefore mortgage rates gone up. No, they've been going up with inflation since basically when they made the Fed funds rate 0. So we expected all this to happen, and again, the mastermind that I went to that had David Luna in there, they had at the beginning of the year they had predicted the first half of this year rates were going to go up high, and because of what the Fed was doing and how they're mismanaging the inflation rate. Again, as inflation goes higher, so will mortgage rates. So, what they also forecasted is they knew the Fed funds rate was going to raise, so therefore it was going to bring inflation down, bring mortgage rates down, but they're going to do this incrementally until August. So every month until August, they may change it quite a bit, whatever it is. But what we're expecting in November is that rates will come down. Now, is that a good reason to wait? It depends. It might be a good reason to wait till you're November, but the other things, home prices aren't going to change. So something to also look forward to in the future is that if you do buy a house now, you are looking at a really good position to refinance near the end of the year or into 2023 when we're seeing recession-like conditions. And that's when rates are at its best. It's very similar to what we saw in 2020, where a lot of people refinanced their house for a much, much lower rate and saved hundreds of dollars. So unfortunately, that's where we're at right now. But, there's still not, it may price some people out, but for the most part, demand is still extremely high, which will cause home prices to continue to go up. So hopefully this was helpful. Hopefully you guys got a lot of value out of this. Hope and tune in next week, and I'll talk to you guys soon. All right. Have a good week.